Hey guys, hope you are all having an incredible day. Today I wanted to go over what to expect regarding AMC's fourth quarter upcoming earnings report, which will take place next week on February 28th, after the markets close. Before we start, please consider dropping a like on the video and joining our Discord. We provide day trading alerts, long-term investment ideas, and much more. The market consensus, as of me making this video, currently predicts a loss per share of 62 cents for the quarter, representing a significant 49% year-over-year growth. Wall Street analysts seem to expect AMC to report revenue of $1,003 billion, which is nearly 4% increase from the previous year, a notable improvement. For the full year, estimates suggest AMC will report a loss per share of 1.0, reflecting a notable 74 billion, showing a nice and robust 21% growth, though it is important to remember that it is still below pre-pandemic levels. Investors should monitor AMC's liquidity and deleveraging efforts, as the company has a total debt of $9.5 billion, including $4.8 billion in long-term debt. AMC raised $865 million in equity in 2023 to address its debt and stabilize operations. The company ended 2023 with a net debt ratio of 9.7 times and an estimated EBITDA of $423 million, which was an 807% increase, a significant improvement from 2022. While fourth quarter performance may be weaker, the overall outlook for 2023 shows progress, particularly in post-pandemic demand and balance sheet strengthening. However, challenges remain, and market enthusiasm may not be significantly sparked by these improvements. AMC's revenue heavily depends on domestic box office performance, and the outlook for fourth quarter revenue based on 2023 box office figures is not optimistic. The domestic box office saw a slight 4% increase in fourth quarter compared to the previous year, but remains below 2019 levels. Despite some improvement in 2023, the domestic box office fell short of pre-pandemic levels, indicating potential revenue challenges for AMC in the future. Aron took to Twitter to say that there will be a significant update on shares, stating, and I quote, "I realize many of you wanted my take as to what is going on, but the best time to do so is on this year-ending earnings call. Listen to the webcast, because I will have much to say. I am really looking forward to hearing what he, of all people, has to say. As you all know, AMC has taken an absolute beating since the conversion of the 8 preferred shares into common shares. AMC's market capitalization has fallen below $1 billion, and even after the massive dilutive efforts to create capital, AMC still faces about $4.7 billion worth of debt. I still am of the belief that AMC's fundamental value is still intact. I think this company can survive long-term because it offers a service that is becoming more needed the companies making movies. When Netflix, Amazon, and Apple have all expressed the financial need and desire to put their own movies on theaters, it goes to show you the overall narrative that theaters are dead is wrong. Movies are becoming more expensive to make, and theaters allow these companies to get significant returns on their investments through the box office. Yeah, I see a lot of analysts argue that theaters are a declining industry. And that may be so, but it doesn't mean theaters are doomed to die either. Spotify didn't kill the concert business, ESPN didn't kill stadium attendance. Hell, even theaters didn't kill live plays either. AMC as an individual company has a steep hill to navigate, and it is a risky investment indeed, one that has crushed many investors' investments so far given the company has lost over 90% of its value. But I do think AMC could potentially come out on top in the end. It all depends on how the board and CEO in particular navigate the ship, and I am no fan of either of them, but I really want them to succeed. Let me know what you guys think down in the comments below. I hope to see you guys on the next one. To the moon.